The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Hope everyone had a great Christmas holiday. We pick things up December 29th, and we got some selling across the board right now. S&Ps, as I speak, we're down 30 points off 0.4% right now. We're trading at 69.49. Metals are the story this morning, though. We will get to them. Growth stocks as well. NASDAQ off by 0.7%. Off 177 points, 25,686. You get the Dow right now. Challenging the lows of Friday, off about 0.25%, off 128 points, 48,870 in the Russell, negative by 0.4%. Now, we're going to go to yields in the dollar first, and the point being, not a lot of volatility. Okay, the 10-year is up 4 ticks right now. We got a 10-year yield about 4.12%, 4.12. You jump over to the dollar, nothing, right? Dollar, 5 pennies in movement, 98.08. Okay, right where we were last Tuesday. No real move. Now, let's get into gold first, and silver's the one, though. Gold's off $142, folks, off 3.1%. You know, I put out an early edition of the gold report out this morning. Okay, these markets are jumping. Look at this move we got going on in gold, and this is not even the big one. We're going to get into silver. Folks, if you have equities in this market, just pick a stop, okay? 2026, I think it's going to be a good year for metals. I think the dollar's under pressure. I think yields are under pressure as well. Both of those related, of course. But it's been quite a run, folks. We've had almost a 2-year run. That's a daily. You put things on a weekly. This market's gone straight up for almost 2 years. Okay? And that's a weekly chart, folks. That is a weekly bar in gold. And it is not even 9:30 in the morning. That's this week. Look at the price expansion that we have going on. Now, what's deceiving here, okay, is the way that we accelerated higher on a holiday week last week. You do it on lighter volume. That's your weekly. You take a look at the daily, okay? Yeah, look at the daily volume in gold, almost exceeding what we saw on Friday. Friday was a full day. Now, yeah, okay, it was a holiday day of all holiday days. But, folks, we've done 173,000 contracts in gold, and the day is just beginning. Now, silver. Now, yeah, we had some trades that we entered, okay? And I put this out on the gold report today, all right? We had 3 equities that we entered, folks, in this market. 2 of them were silver stocks, and here's where we entered them. We got a great execution, okay? Little bit of skill, a lot of luck, whatever you call it. This is what I told them, okay? Don't give too much back of your gains on this run. We have stops in place. Look at the move in silver going on right now, folks, okay? We were talking about it last week, talking about how the miners had not caught up yet with some of the silver stocks, okay? And you go to some of the equities. First, Majestic we'll start off with. Okay, I want to show you the price action we had last week. Look at the price action now. Look at the price action today. Okay, but look at the price action we had last week. There was no appreciation. This equity actually dove lower on Friday, right? Okay, and we were discussing it in the den, and yes, there was a dislocation between the miners and the metal prices. Well, there's 2 ways that can correct itself. You can either have the miners accelerate higher to catch up to the metal, or, okay, what seems to be playing out this morning is the metal got ahead of itself. The miners and the equities know that that's not a longer-term price that you're going to see for silver. Okay, silver is not going to push $82 right now. Okay, we got a bearish engulfing going on, and it's not even 9:10 in the morning, and you're doing it on volume already. This is going to be one of the biggest days we've ever seen in silver, folks. You've already done 170,000 contracts, which is almost the biggest day on record going back. I mean, there's going to be some bigger days out there, but look at this. Okay, you're challenging the biggest days in silver, and it's not even 9:10 in the morning yet, okay? Don't give back too much on this pullback, folks, because to finish that thought, one of the ways that situation corrects itself is that the prices that we saw on silver of $79 on Friday, the prices we saw overnight, and it was an immediate spike. Okay, look at the futures. You spiked up there within 10 minutes, and who knows when we'll see $82 again. All right, we're $10 off that price level, and you were as high as $80 at 1 in the morning. You were as high as $76 an hour ago. Silver just dropped $4. It can always move further than you think, faster than you think, folks. Further than you think, faster than you think. Okay? We've gone parabolic here. We're getting the reaction this morning. And who knows where it's going to end up. It's still a holiday week. Now, if you're a metals trader, you're at your desk this morning. Okay? But it is a holiday week, man. We got Thursday. Markets closed for the holiday. And boy, we are going to rip lower. You're going to do it in volume. And yeah, so, AG is a silver stock, okay? Endeavor is another silver stock. Endeavor's down 50 pennies this morning. There was no move last week on Friday as silver accelerated higher, right? These miners could not find a bid, and now they're pulling back this morning. You're seeing prices that we didn't even see last week at all right now. Endeavor's trading at $9.45, okay? That's lower than we were all last week. And you go over to silver, meanwhile, silver's still well above where you were trading on Monday, where you were trading on Tuesday last week, and actually where you were trading on Wednesday. So the correction isn't even there yet, right? You have the equities trading at lower prices than you were last Monday. Meanwhile, silver's at $72 and they were at 69 last Monday. Okay, there is still some real correction that could go on in this market because it has been a heck of a run, folks. All right, you look at some of the runs that this has had. You're talking about Endeavor. Goes from $3 in April, but you don't even have to go back that far. Just look at where we were in late November, okay? You're talking about a run, folks, from $7 up to over 10. It's almost a 50% acceleration in about a month, right? And where do we come to? Right up to the highs, and you do it on lighter volume. First Majestic, you just trade from $10.55 to $18. You're up 80% in a month. Okay, I mean, it's not spreading fear here. It's just a realization that this market's gone parabolic. And if you were fortunate enough to be in it, okay, don't give up all those profits. Don't do it, folks. You just had silver trade from $50 to $80 in a month. Yeah. Okay, you take a look at the monthly on silver. We've never seen a run like this before. Look at this chart. Okay? Don't believe that somehow it's different. You're going to go up forever. Yes, on a longer term basis, I like metals, as I said. Okay, this is not a doom and gloom. We're going back to $30, $20. No. Okay, but this is, hey, look at history. Look where we've been. Look at the run we have going on. I mean, silver, you can make the case. It's been a straight trip higher for over 3 years, right? From $17 to 82, but realistically, a lot of that occurring in the last 6 weeks. Okay, so protect yourself out there, folks. All right. I wouldn't fault you if you just got out of some positions, locked in some profits. Okay. But at a minimum, pick a stop, honor it, put it in there. If you're in some of these equities, you're going to have another opportunity. All right. What's the risk? The risk right now is an opportunity risk. Okay. And those are real. Opportunity risks are risk. You better believe it. The opportunity risk is that you're out of the market, right? There's going to be opportunities to get back in, folks. Okay. Getting out of the market with silver at $72, if you've been riding this thing up from anywhere near there, it's going to be an interesting day in the markets, to put it lightly, folks. We haven't even gotten into equities yet. We'll take a look at some more miners. Gold's off what are we off now? Gold off $134. We'll come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. So Bitcoin, not really participating in the way that metals are participating. Bitcoin just off $100 right now at $87,830. You've been under pressure recently, to put it lightly, on Bitcoin, but the shift turns to metals today. And yeah, that's quite a bearish engulfing on silver. Now, the volume in silver on a weekly, okay, we've had some real volume. Now, yeah, you've backed down a bit, right? The week of December 8th, you accelerate on 613,000 contracts. You push higher on 556,000 contracts, and then you push higher on 490,000 last week. Now, the remarkable thing about last week is you did that on 3.5 trading days, okay? And really, that was a Friday spike. It had tremendous volume. But guess what? We've done a bearish engulfing with volume before 9:30 in the morning. Listen, I love silver. I love the silver equities, and I'm not closing them out this instant, but I have my stops in place this morning, and they may get hit, and I'm going to take them, man, okay? Because you better believe how you got that pulling back there in real time. And where did we go to? We just got just over the 1 to 1.618 expansion. It's a big one, man. Who knows what the volume's going to be like today? You have to chuckle on silver. Now, you look at where we've been on the XAU and the HUI. You back things up on a weekly. Okay. Yeah, you had a pullback late 2024. We had the pullback in October as well. But this year, you just went from 133 to 363, folks. This is putting crypto numbers to shame. Protect yourself. Protect your profits if you're in these trades, okay? My dad always used to say, you own the metal, you trade the miners. Now, I don't think the run in metal is over. But you better be ready for some substantial pullbacks when we've had a run like this, okay? I mean, we were just trading at 263 last month. We're at 363. Now, we're not going to be at 363 on the morning, on the open. Okay, this thing's going to spike lower. But I think a lot of people would be shocked if the XAU traded down 35% in the matter of by next month. Well, we just traded up far more than that. You traded up 40% from where we were in November. And the volume says it all, folks. All right. Silver's been strong, but look at the volume on a weekly basis in gold. Not the same, man. Right? We had all this volume on the buying October 13th. You back off with some volume, and then we've trailed higher from about 3,900 to 4,000 on lighter volume. And you had very light volume on that acceleration last week as well. You had some numbers on Friday, okay? Decent numbers on Friday for a holiday day, but nothing like the volume we had up here at the highs of October. Silver's a different story. Silver's look stronger dramatically. Okay, you look at where we were in October, look at the volume we have now. Right, look at the volume we had Friday, but today's going to put it to shame, man. You jump over to copper. We jump higher, and same thing overnight on copper. Look at the volume in copper, right? Friday, you accelerate higher with volume, and you rip lower with volume this morning. I mean, copper's getting their own stories this morning. Copper hits record in London as supply fears fuel rally. And, yeah, there's a lot of demand and fundamental aspects of what's going on. Some great articles posted about silver and the Tiger's Den over the weekend. If you haven't checked it out, folks, get in that Tiger's Den. But you had the biggest intraday gain since 2022 at nearly $13,000 a ton. Prices increased 6.6% in the initial minutes of trading before later retreating to trade only about 1.6% higher. There's just rapid volatility everywhere. Inventories in copper surging into U.S. warehouses this year. Well, guess what? If they're in U.S. warehouses and other people need them, that's kind of the problem going on right now. Longer-term demand prospects remain strong. Electrification trends. And yeah, copper's been doing very well recently. Jump over some of those copper stocks. FCX, been on quite a tear, but you're going to open at 51 bucks and change this morning on FCX. Jump over to Southern Copper. You're going to open at almost 145 to 147 this morning. You're as high as 152 on Friday. Jump around to some of the other gold equities. We're going to do a lot of talking on metals, but we're going to get over to equities as well. Okay, Harmony shares, you're down about $1 in the pre-market right now. Now look at the volume even on Harmony on a weekly basis. You get this huge acceleration the week of September 15th, and since then it's just kind of been lower volume days. And, you know, many of the equities, folks, extremely thin volume last week. You don't have to read too much into that. The only thing you do have to read into it is that we got quite an expansion on volume, on lighter volume. We had wide price spread on last week, and many of these equities did it on very thin volume. These markets just keep selling off right now. All right, we'll jump back to metals, but before we do, platinum. Same deal, man. Right, platinum rings the bell. All-time highs, and just like that, we're down $370 from the highs. $370 from the highs. This thing was just trading at $890. We're $370 from the overnight highs. But guess what? We're just back to where we were on Christmas Eve. Okay? That's the definition of parabolic. When these moves defy logic and you say, wait a second, we're down almost $400? Yeah, but we're just back to where we were on Wednesday morning. Say, wait, we went up $400 from Wednesday morning and you went down $400? Can always move faster and further than you think, folks. So be careful. All right? And the other thing is, where did we just go to? The 1 to 1.618 expansion from that run that began in April, on the April lows when platinum's at about 878. All right, we jump over to the S&P. And for the S&P on a Fibonacci basis, okay, you look at the October lows of 2023, we just did an exact 1-to-1, and man, you did it in no time. That first move took almost a year and a half, from October to February of the next year, right? About 16 months. You pull back for barely a month into the April lows, and then you do that same exact move in just 8 months. And on a volume basis, very light volume on a holiday week, but we had some nice volume on the week of December 15th. But what's looming out there is the selling you had on October 17th in the S&Ps. You jump over to the NASDAQ. Now the NASDAQ, if you look at the same exact Fibonacci number. We're actually well above the 1-to-1. S&Ps, that puts you right at it. We're just above that price level. And what do analysts think, folks? What do they think? Every Wall Street analyst now predicts a stock rally, and that should say in 2026. Bloomberg editors, get yourselves in line. There, they edited it. How about that? Can you imagine catching that headline? People reading it. Stock rally in 2008. Either way. Every one of them, folks, okay, is going to rally in 2026. The longest winning streak in nearly 2 decades, if that's what happened, if we get that acceleration, 4 straight years. The average year-end forecast, about a 9% gain. Not a single one of the 21 prognosticators is predicting a decline. We'll talk about some equities, folks. We'll get into some of those large, mega growth stocks. We're coming back for the opening bell. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P negative by 30 points. NASDAQ off by about 0.7%, off 189 points. You got the Dow off by 0.2%, and the Russell off by 0.5%. Metals are the story today. Gold off by $155. Listen, put your stops in, man. I keep saying it, been saying it for a while. This move was coming, okay? It was only a matter of time. It was a matter of It was not a matter of if, but a matter of when, and that's just how markets work. They don't go up forever. They don't go down forever. And it's been almost a 2-year straight run. And the things that got most worrisome is kind of the volume trickling off from that acceleration. What's great here is, right, you look at the volume that even the gold contract, I say even, you look at the volume, okay, that gold has. You ratchet up to highs October 13th. You pull back on lighter volume, and then you catch a pop the week of November 10th. That's how you do it. Okay, but since then you've had no follow through. You got that acceleration, but that's how you drive up on volume. Okay, this is not how you drive up on volume. It can extend, it can keep pushing, but that's not quality volume on that last move. Okay, you take a look at silver, much closer to quality volume on silver. Right, you look at the volume we had, you look at that acceleration in August all the way up to October highs. That was strong, man. Okay, and that's why in the gold report, folks. All right, so check this out. All right. You know, my dad believed in price and volume, folks, okay? It was the ecosystem I was raised in, and I believe in it as well. And this is such a perfect example. And sometimes the market can always push higher on light volume, all right? You might miss some trades, okay? But look at the move. And this is how I'm going to walk you through right now, okay? The kind of the methodology of some of the trades that we just had in the gold report. Now, you can still check out the gold report, folks. Okay, we got 3 active positions in there right now, too far away from entry points to get into those active positions right now. But we have our stops in place, and 2026, I think, is going to be a good year for traders as well as investors. Okay, we are going to get some volatility, and this is just a little bit of a glimpse of how that volatility is going to potentially play out. Now, we're not going to get $10 moves in silver every day, okay? But now look at the move up. Now, here's where, so you check out a daily, okay? So there's your weekly volume, okay? You go big picture, you look at the weekly, you say, man, okay, you trade, that's quality volume, folks, right? Quality volume to the upside, you back down on lighter volume, all right? Now we go to the daily. There was your acceleration on the weekly to higher prices with volume. Okay. We zoom in on this action. Here's your pullback on lighter volume. Okay. And what had happened was, folks, is that we were pulling back on lighter volume, right? We had this huge acceleration. Okay. You pull back, and here's where I enter trades on November 24th. Okay. And listen, there's no exact science of the minute that the system says to enter a trade. But in general, all right, I love the risk reward setup there. I said this market has just accelerated higher on volume, right? Look at that ramp up into October 13th. You pull back on nothing, right? Look at the 3 weeks, October 20th, October 27th, November 3rd. You just pull back on vapor thin volume. We did 270,000 contracts the week of November 3rd. We've done 178,000 this morning. This morning. That's how little selling there was on this pullback. I said, okay, we got a nice sign of strength November 10th. You pull back a little bit, and then I stepped in when we got this break the week of November 24th, okay? If I could walk you through the, anatomy of a trade, that's one of the best examples out there, and it worked out this time, folks, okay? We stepped into 3 different equities on November 24th on the gold report, okay? And this is not even bragging about the gold report. This is just walking you through the anatomy of a trade, okay? There's going to be plenty of trades where you see a setup like this, you're wrong, and you just take your stop. That's okay, too. It doesn't move like that all the time. You're setting yourself up in a probability business, okay? And I love the probability in this. And this year was tough in the gold report. We had some great equities early in the year, okay? And the reason why it was tough was not because we lost money. It was tough finding entries when the market just went straight up, right? Well, guess what, folks? That was the opportunity, okay? And what made it clear? The volume made it clear, especially on a weekly. Now, that was silver. You take a look at gold, right? Even more pronounced, the acceleration higher, the pullback on lighter volume. That week, November 3rd, you did 1 million contracts. As I mentioned, we've already done 200,000 already this morning. Okay, not as pronounced as silver. And then we stepped in. Now, we bought 2 silver stocks that day and 1 gold stock. Okay? And the reason why is because silver looks stronger, man. I liked one of the equities in gold as well. If you want to check out those equities, folks, they're still in the gold report as active subscriptions, as active positions. We'll see if we get stopped out this morning. Very possible. Okay, you can't make money if you never sell and win and trade, folks. I've talked about it before. One of the greatest things that I ever kind of came to terms with is not needing to buy the bottom and not needing to sell the top. You're never going to get it, okay? And if you try and get it, the one time you get it, you're going to miss so many other opportunities because you wouldn't sell when you can, not when you have to. Our man Dave White. And you were probably a little bit afraid, tentative maybe, okay, to get in. Now I'll show you real quick. Watch this. It doesn't even look that big on this chart. But silver that day had trading from $49.37 to $51.25. Okay, $2 was a massive move at that time. And I said, man, am I really going to get it? Yeah, you get in after you have a sign of strength, okay? And this is the big methodology that I had to become okay with. It took 5 or 10 years to really get okay with, well, geez, man, I'm getting in this equity, and I just missed that first acceleration. It's a hit. No, what you did is you waited for the confirmation, okay? You waited for the sign of strength. Then you get in, right? And, on the side of not waiting for the highs, we're $10 off of where we were trading at, folks, last night. Okay, it can always move faster than you thought and further than you thought. And guess what? You can always get back in. Okay, there's always another trade. Don't be afraid of taking profits. We have a bearish engulfing in silver, and you're going to do more volume than we've maybe ever seen on silver. Gold down by 3.4%. Gold not as pronounced, but silver, man. You jump over to platinum, same deal. The ones who have gone up the most are going down the most. Platinum's down 11%. There's your daily. Okay, platinum's already done almost more volume. You jump over the weekly, right? I mean, folks, we might engulf the entire prior week by noon. You're at 2584, and we're about to get a 2100 handle on platinum, okay? The markets are not behaving reasonably right now. That's what you have to understand as well. Markets not behaving reasonably right now. Keep that in mind, okay? When you go parabolic, take the fund, and that's why the equities didn't follow on Friday. Now, yes, you could have had fall through in the equities today, or you could have had a pullback on the metals. Well, which one's going on, folks, okay? Metals were not reacting, and if they were reacting, and the miners thought that silver was going to be above $82 longer term, the equities would have been bidding up, but they realized that was a parabolic move, and you're getting the pullback today. We'll talk some equities when we come back, folks. S&P's off by 15. Coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&Ps right now. We'll put it on a 5-minute chart. We catch a little bit of a bounce from the lows of about 69.40. We're jumping right now negative by just 16 points off about 0.25%. NASDAQ, check out that bounce, man. We hit a low of 25,660, 656. And just like that, you're up 150 points off that low. We're above where we were coming into the opening bell. You're back to about 2 in the morning on the NASDAQ. Russell catches a bit as well. Russell, negative by just 3 points at 25.47. We check in on metals. Gold. It's almost not stopping right now. Gold off by almost 4%, $174. This might be the biggest decline we've ever had. It's only 9:45 in the morning, folks. Okay. Silver off by 7% right now, off $5.45, but we're now $11 off of the highs of last night. And platinum, yeah, same thing. We just hit basically tick lows in platinum, off by 12.5%. Jump over to Microsoft shares. Yeah, they're talking about Microsoft in the den, rightfully so. Microsoft, flat on the session right now. Google shares, down just 0.5% right now. You jump over to NVIDIA, the big dog, down 1.4%. Some of the other chip stocks, Micron, in the positive. Check that out, up by 0.7. Broadcom, particularly volatile recently, down by 0.8%. Jump over to Tesla. All right. On a weekly basis, that was some nice volume, man. You know, you pull back a little bit on a holiday week. We'll see how the volume comes in. But that acceleration the week of December 15th, you put it on a daily. Yeah. You push the highs, and then we've backed off a bit on lighter volume. We'll see how the volume comes in today. That's some decent volume to the upside on Tesla. So back to the article on Bloomberg, okay? Every Wall Street analyst. Now, number one, there's always a bias on Wall Street to be bullish because over the long haul, markets go up, okay? So that's why when futures contracts roll over, right, there's always a lift in price because in theory, markets go up. And not even in theory, okay? Markets go up, whether it's just because of inflation. Imagine, just because of inflation, the price of equities should go up 2 to 3% a year to equate to what the dollar buys you, right? Let alone the growth that goes into them, the historical growth. So overall, there's an inherent bias where markets in general are going to go up more than they're going to go down, but boy, they take the stairs up and the elevator down, right? But yeah, at the big banks, an optimistic consensus, as we said, that the prices are going up. The number that they lock in at is about a 9% gain. 9%, okay? That's the average year-end forecast for next year. Not one of the 21 prognosticators is looking for a decline. Ed Yardeni, is that how I pronounce that? I mean, I see him out there all the time. He's been a Wall Street veteran, okay? Veteran market strategist, longtime bull. Says the pessimists have just been wrong for so long that people are kind of tired of that shtick. Well, that's the stairs on the way up, the elevator on the way down, and you just want to protect yourself, folks. And some of the things. So this is not to harp on Mr. Yardeni, okay? Because one of the things, like in the Tigers Den, folks, everyone's going to be wrong, right? One of the biggest risks you take out there is not putting your opinion out. Everybody's going to be wrong. Doing the show took me a while to learn that too, okay? You're damn right I'm going to be wrong all the time, okay? But I'm right more than I'm wrong. And like you're saying in the Tigers Den on that great comment, okay, JK, EKS, yeah, risk versus reward is a big part of it as well. So everyone's going to be violently wrong, all right? Everybody. So just get that out of your head. It doesn't prove that you know nothing or whatever. Everybody's going to be wrong. If you're out there putting out an opinion, all right, every single day, it's so easy to cherry pick when people are wrong, when they're out there putting out an opinion every single day, and it's on the record, okay? So with that said, right, so you get articles like this. This is just like a buyer beware type message, right? So Yardeni says, he expects the S&P up 11%. All right, the pessimists have been wrong for so long. People are sick and tired of that. So that's what. So I'm like, man, what happens if we're in the event that we are dealing with not a bubble, okay, but maybe just valuations are a little high, right? So, okay, if that's the scenario that we're in, right, well, what was Yardeni out there saying when we were in that type of a situation, right? And so I just Googled it real quick, and he's, to his credit, folks, he's been out there for decades. So, hindsight 2020, all right? But, and this is from Peter Coy, but it lists Yardeni in here, okay? And just one of the things that you want to look at, all right? Let me get him. I'll get him afterwards. It's hindsight's always 2020. It's so easy when everyone's together. Okay, the Bulls that are the Bulls now, they've been Bulls forever. They've been right forever. But when you hear that everybody says the market's going up, you have nothing to worry about, just remember that you're the one who has to be worried about your money and nobody else, okay? And yeah, and part of what this article talks about, okay? Let me see if I can find where Yardeni is in it, not to... So here's where the quotes start, and this article is something else. Just it's always something else when you read an article right prior to an implosion in the markets, okay? But what he was out there talking about, and this is Yardeni, saying that when Americans are happy, they spend money. When they're depressed, they spend even more money, as long as they aren't losing their jobs. So don't worry. Well, that ended up being a big problem, okay? And this isn't Yardeni in this article, but one thing that did catch my eye in this article in particular is check out what they talk about here. Now, this is not Yardeni saying this, okay? Let me get it, because they talk about the banks. How do you play this treacherous situation? Watch this. Oh, let me get it. I may have to get it after the break. No, they talk about housing, of course. Okay. Nope, we get down further. You're going to love this. They talk about the banks that have underperformed with high dividends. Let me find it. All right. If you buy the bullish case, you might consider buying beaten down banking stocks, which offer attractive dividend yields at current prices. The trick is figuring out which banks have already come clean on their loan losses and which ones have not. Well, how'd that one play out? Okay. You look at some of the charts, and that's the bullish case. But, folks, that article was written in December of 2007. When Bank of America was at $45, it went to $2. Okay? That was not the bullish case. And this isn't going to happen. But it's just like when you hear this stuff, I mean, look at Citi. Was at 311 in December. You went to $9, right? Nobody was a bullish case there. All right. So be careful in this market. Doesn't mean it's going south, but protect yourself. And when everybody's saying it's going up, just protect yourself, folks, because equities, we get some real high valuations, to put it lightly, in this market as well. But guess what? Market's finding a bid this morning. We're only off by 23. We're coming back looking at metals one more time.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We jump over to NVIDIA shares right now, off 2%. Yeah, Microsoft, you rip higher, but we're flat from where we opened. You jump over to Walmart, in the positive by about 0.3% right now. We jump over this story. So Walmart, Sam's Club, is beating Costco at its own game in China. And yeah, that's probably a good market to be beating Costco. Walmart Warehouse Club division, rare success by targeting the premium market over there. And they got 60 stores already. Sam's Club has about 60 stores in China and counting, up from 39 3 years ago. The biggest stores each generate more than $500 million a year. Imagine that. You open 2 stores, $1 billion. Now, Costco opened its first store in China in 2019, and they only have 7. 7. All right, now I'm a Walmart bull on the long term, okay? But yeah, you better pay attention when you're doing 60 stores and every store is $500 million, and meanwhile Costco's at 7. In the U.S., Sam's Club, yeah, had struggled, to break away from Walmart's budget reputation. But yeah, they carved out a niche of a premium chain offering high-quality items hard to find anywhere else in China, going premium. And hey, they're going premium in the U.S. as well, okay? Costco talks about it. Sam's talks about it. Even Walmart now talks about that their growth is happening from people making six figures and more. That is where their growth is. And why not, man? You know, paper towels at Walmart, they're the same paper towels at Publix or Target, right? To a certain degree. The Target Chinese customer is known internally as the BMW member. What kind of car are you driving? We'll get you in there. Pretty remarkable. All right, folks, we finish it up with gold and silver. Gold, protect yourself, okay? Put a stop in there. You're not going to regret if you take a big profit, okay? But you will regret if you give too much back. And we're down by $160. Silver right now down about $4.58 at $72.61. Folks, thanks so much for kicking off the holiday week right here. Stay tuned. We got a full day of live programming today. We got our man Basil Chapman up next. Steve Rhodes at 11. Fast Market at 12. Larry Pesavento at 1. I'll be back at 3 o'clock. Have a great Monday, everybody. Thanks so much.